public hearing, but first I'm going to turn it over to Ms. Black for her presentation.
Thank you, sir. This is a short presentation we have on the millage. As we always begin each year, just a reminder of what the millage is. It is a tax levied by the county for county purposes. It is the tax rate per $1,000 of assessed property value, and you determine it by dividing your budgeted tax revenues by your total digest and subtracting any rollbacks. Under the Taxpayers Bill of Rights, that requires you to roll back your millage if there's significant net value added reassessment. So there's a state formula that you have to use to compute your tax revenue that is, or tax revenue increase that is from reassessment as a percentage. If you don't roll that back, then you have to advertise the tax increase as a percentage, and you have to have 3 public hearings. The significant net value added reassessment, you calculate your millage equivalent of your reassessed value added, or your increases from reassessment. And the difference between that and your prior year millage rate is your rollback millage, and it applies to all existing real property. So as an example, if you had $100 million added through reassessment, and your current year digest was $2 billion, and your prior year millage was 10.938, the millage equivalent of that $100 million is 0.547 mils. So you would have to roll back your millage to 10.391. If you left it at 10.938, you would have to advertise a 5.26% tax increase. So if you look at the actual rollback calculation for this year, the net value added from reassessment was $25 million. Your current year digest is $3.1 billion, and your prior year millage was 10.938. So the value of that $25 million is 0.087 mils. So your rollback millage is 10.851. Since you're setting it at 10.851, you only have to have this one hearing, and there's a 0% tax increase to advertise. Otherwise, you would have had to advertise a 0.80% tax increase, and you would have to hold 3 hearings. The formulas that we use for the millage, your gross millage is your budgeted property tax and your budgeted local option sales tax divided by your digest. Then your local option sales tax rollback is your budgeted loss divided by your total digest, and then the net millage is the difference between those two. Just a reminder about local option sales tax. You have an 8% tax rate here. 4 cents goes to the state of Georgia. 1 cent goes to your T-Splost, which is for transportation improvements. 1 cent goes to your special purpose local option sales tax, which is split between the county and the municipalities for capital improvements. 1 cent is for your education splost, which is split between the school systems for capital improvement, and 1 cent is your local option sales tax, which is split between the county and the municipalities. That is for property tax relief and reduces the amount that you would have to raise through your millage. You have your millage calculation here. In the first column, you have your prior year. In the middle, this is 100% collection. This is what you base your millage off of, but we actually balance back to our budget at a 95% rate because you're not going to collect the full 100% in the first year. But you can see that your 100% digest is $3.1 billion. 95% of that is $3 billion. But those both go back to the 10.851 millage, which is your rollback millage. The budgeted property tax for the county in the 95% column, the $25,890,000 is $113,000 more than you have budgeted. So that was pretty close. Next page. This is an example of a property tax on a $200,000 home, comparing someone who lives in the city of Valdosta to an unincorporated resident. That $200,000 home has an assessed value of $80,000, and then a homestead exemption of $6,000, so the net taxable base is $74,000. You'll see the county portion is 8.601. That is down from 8.688 last year. That's $636. The Development Authority has 1 mil, which is $74. The Parks and Recreation Authority gets 1.25 mils, which is $93. That city resident would also have City of Valdosta. This is calculated using the same rate as last year because the tax commissioner's office did not have information on what the city was going to do at the time this was put together. At 7.809, that would be $578. And then the city school system is going from 16.751 down to 16.691, which is $1,235. So the estimated tax bill in the city would be $2,616. That same resident in the unincorporated area would again pay the $636 for Lowndes County, $74 to the Development Authority, $93 to the Parks and Recreation Authority, and then the county schools is going from 16.384 mils to 16.190 mils. So that's $1,198 for a total estimated bill of $2,001. If you break down that City of Valdosta resident, every dollar that's paid, 24 cents comes to Lowndes County, 3 cents goes to the Development Authority, 4 cents goes to the Parks and Recreation Authority, 22 cents to the City of Valdosta, and 47 cents to the school board. For the unincorporated resident, out of every dollar that's paid, 32 cents comes to the county, 4 cents to the Development Authority, 5 cents to the Parks and Recreation Authority, and 60 cents to the school board. Here's your millage history. Again, we bring this up also during your budget, and the blue section is the portion that comes to the county, and you'll see that that has come down for the last several years each year. And then this, of course, is also in our budget presentation, and this just breaks down for every dollar of the general fund where that money goes, and that breaks it down between the different offices and services.
Okay, that it?
That's it.
Okay. Any questions for Ms. Black? Okay, is there anyone in the audience would like to speak in regards to the millage, negative or positive? We'll take them all. Okay, hearing none. Commissioners, any comments?
Only one, Mr. Chairman, just that this reflects a reduction, and so it's good to be able to do this at this time, given the circumstances. So I'm happy to say we can do this, but this comes with a price as well. So, but I'm just happy to be where we are, because earlier this year we was hoping to talk about doing fire service, and which was going to be extra 2+ meals, but we are where we are, so just thankful.
Good. Well, as I've always said, I've always felt like that when you have the opportunity to roll back and reduce it, you should, because there will be a time that you're going to be called on as commissioners for a need to increase. And if you're being fair and being honest with the taxpayers in our community, then the best thing to do is roll back when you can, save when you can, and then when you have to, I think that they have a better understanding of us having to make that decision when that comes about. Still wouldn't be happy about it, but I think they'll feel a little better about it. Okay, if there's no one else, if nobody would want to comment, then we'll close the public hearing on the setting of the millage rate.